Welcome to another episode of the Weekly Crypto Check-In, recorded on October the 8th, 2025. I'm your host, Robert Swarthout, and joined by my co-host, Andres Sandate. How's it going, Andres?
Good, Robert. It's good to see you. Hope the week is going well.
Yeah, I am back in town. I was out of town last week, but back in town enjoying this admittedly beautiful weather we're having in Atlanta. Would like a little bit of rain. It's a little dry, but otherwise it's been great.
Yeah. What's been happening in crypto from your perch?
It's we've been busy with a lot of different things in crypto, but in particular, the ETFs really seem to be taking off, and then we're going to talk a lot about that here as we start.
Yeah.
We were just talking before we started recording, and I think what I find interesting about all this ETF news is a lot of it's happening right now with the government shutdown, and I assume the SEC would not be approving or doing anything, but maybe there's some kind of like auto approval process that continues to run. I don't know. Well, maybe we have to dig in on that some other time and report back. But so let's get started here. Our first topic is ETFs are getting staking, specifically the Ethereum ones. That's the ones we've often talked about not having staking. But the Solana ones that are out there also are getting staking as of this last Monday, so 2 days ago. Kind of a big deal because it's the first crypto product that is publicly traded that has the ability to have yield. And that's what some people are really interested in. So,
yeah, 4 or 5 years ago, I don't know if it was that far back, but there was so much craze in crypto around yield, and you saw all of these sponsors and issuers come to market selling high net worth investors and advisors around the idea of crypto yield.
Mm-hmm.
Is this another version of that same?
No, this is different. That was yield farming. That's like you would add two assets into a pool, and there was like crazy percentages. Like too good to be true type situation. And we saw a lot of those come flaming and crashing to the ground. I think that was spring of 2021. So when we were all locked in our houses during COVID.
Okay, got
it. So this is specifically, as part of the Ethereum blockchain or as part of Solana, if you quote unquote lock up value in the network, so you hold tokens, you can mark them as staked in some cases, and they earn a yield. So there's inflation built into the network because they're constantly creating more tokens to be able to do this. But it does provide a yield that, we went from zero to something. So I don't know what the exact yield is. I think it fluctuates depending on how many people are staking. So there is, I guess, the benefit to be a long-term staker. You may end up with a higher reward as people get disinterested or interested in it. So it's but I think we should point out there's a couple different ways the yield can be received, right? So for the ETH ETF, so that's ETHE, that would be paid out directly. So that's going to be in dollars back to the holders of those ETFs. But for the ETH and the GSOL, which is the Solana one by Grayscale, those rewards will be built into the share price of the fund over time. So you don't necessarily have to deal with it. I think it's probably more efficient from a tax perspective that it happens that way. I think is what some people will like choosing that one for. So
you think that who's going to educate? I'm curious about the advisors. Who's going to educate the advisors around all this in terms of these crypto ETF issuers?
I don't know, man. Like crypto's already hard enough, and then you're adding this layer in on top of it. Crypto's moving quite quickly, and I appreciate that. But to your point, education is a challenge already, and it's only going to get more difficult. I think what happens over time is you're going to see people not holding specific token ETFs, right? You're not going to have just a Bitcoin. You're not going to have just an Ethereum. You're not going to have just an XRP or whatever. You're going to be holding an index of some type, which admittedly is our one of our next topics. But like, I think because you just need to kind of abstract all that away from the user. They just need to know that I'm holding the top 15 or whatever it is, and they watch that price go up or down in their brokerage account.
Mm-hmm.
I think because it's not like people care about the taxation of underlying assets and ETFs now for the alternatives. Like, I mean, maybe some people do, but most people don't even know to ask the question.
Right.
So I think to your point, it's we may care about it because we just talk about it as news, but I think long term, it's something that most people will never ever consider. So,
yeah.
So our second topic, is kind of a we kind of just hinted at it, but multi-asset ETF. So we're quickly seeing, and there's already one trading out there, the top 5 crypto index. So that's the top 5 biggest tokens, subtracting away stable coins. And that's cool. Over time, it's not going to be 5. But I know Bitwise, I believe, has a product that's either the top 10 or 15, something like that, coming soon. Even that, I don't think really cuts it. But right now, there's too many crappy tokens out there that could end up in an ETF, in my opinion. So it's kind of like it cuts both ways. But over time, I think you end up with a broad market index one, or maybe even vertical specific. We're all about utility tokens, so maybe there ends up being a utility token one, or one that's all about meme coins or whatever. I think we're barely scratching the surface of what ETFs will be. But then you blend in, and this is the topic of this second point, multi-asset. So not just crypto. So there's a Cyber Hornet is the sponsor. They have an S&P 500 plus Ethereum, or an S&P 500 plus Solana, or an S&P 500 plus XRP. They filed for 3 different ones, and they've got their own tickers. I don't think they're quite active yet. It looks like they think they may go active in December, but it just seems like an interesting mix. I don't know why you would choose the S&P 500, which is a huge overlay of the economy, with one crypto. But who knows? And they do have the percentages. The S&P 500 will make up 75% of that, and 25% will be whatever respective token, the one you're looking at. So,
yeah, we are product. I guess there's this product craze that's happening right now. Now that their regulators have made the approval and at least the formation process for these index products easier. Yeah, going back to what you said about the composition of these exchange traded products, and it is now, I believe you said there's a product out there where you can have 5 of the largest tokens minus stable coins, and maybe we go to 10, and maybe we go to 20,
right.
et cetera, over time. But yeah, it really begs the question, as we have seen with the stock market, where you have day trading and you have the meme coins or the meme stocks, where they can become quite popular quite quickly.
Mm-hmm.
And it doesn't mean that they're bad holdings or securities, but it does, beg the question, is there going to have to be an active management component to some of these exchange traded products, so that you don't end up with fart coin in your utility index just because a bunch of people went and bought it?
Right. Absolutely. Yeah. Yeah. There's a lot of questions here and not tons of answers, admittedly.
Yeah.
But they, but even like another example of a multi-asset one is the S&P, and I guess it's S&P Group. I'm not quite sure what that exactly means, but they're launching an ETF that is a crypto index consisting of 15 cryptocurrencies, I assume by market cap, with 35 crypto-related stocks. First of all, I didn't realize there was 35 crypto-related stocks. That's the part that surprised me of this headline. I guess maybe there's some, maybe some miners or some ancillary things out there that kind of got put in this group. But, you're starting to get like I wouldn't call it an S&P 500 because I don't believe that's the right thing to call this thing, but like that of crypto. They're trying at least. So with what they have been given so far. So
yeah, a lot of innovation, a lot of product.
Right. And then you go even further, which is going to be our third topic. And you have Granite Shares, a different issuer out there, launching for Bitcoin, Ether, Solana, and XRP, a 3x long and 3x short ETFs. Like, crypto is volatile enough to think that we need a 3x. I mean, there's already 2x, but like to think a 3x is like what the market needs. There's literally some degens out there that are probably just like foaming at the mouth for something like this. So,
yeah. They're definitely day trading and or highly speculative positions where you could be wiped out or could have big returns in a single day. These are not generally products, and I think these disclosures are all over these prospectuses. Typically, when you see these 3 times leveraged, whatever publicly traded company, they typically say they're not really for long term.
Well, because they reset each day, right? So it's like you can't just like hold it. I mean, you get a reset each day, which isn't exactly helpful. So
yeah. So it requires a lot more active management and time and understanding. So Yeah, but there is probably, like you said, there's an audience out there who are looking for ways to express their risk and view in a very, very unique and different way. So
Yeah.
you have to think there's an asset management firm that is going to build that product if they feel like there's an audience to support it and it can break even.
Yeah, absolutely. So I believe our last topic about ETFs, which is going to basically consist of half the show today, is about ETFs, and basically the launching of many of them are waiting on the government shutdown. The government's been shut down for almost a week now. I don't know quite the number of days, but it's a good number of days. And the SEC must be on hold effectively. I saw somebody compare this to a rain delay at a baseball game. So it's not like it's not going to happen; it's just going to happen later.
Yeah.
And but I guess the point of bringing this up is these things are coming so rapid fire. It kind of gave us a chance to slow down and look and kind of do a little bit of research on fees, which the Bitcoin ETFs where it was a race to the bottom effectively. I mean, you have I think it's the BlackRock one or maybe in first place or something, but like down there at like 20 basis points in fees. But so there's a Litecoin in an HBAR ETF waiting to get approved, and they're going to be at 95 basis points, which I was like, okay, a little more esoteric out on the reservation there. But yeah, they're apparently waiting on those approvals. I don't know for the fees, but from the SEC. So I imagine Grayscale still leads the pack with the highest fees when possible. But
Well, those are high fees by advisor standards for an ETF product. I mean, those are starting to get into the territory of what you historically would have paid for a mutual fund, and even some alternative asset managers have brought their fees down from a traditional 2 and 20 to now 100 basis points or 1%. So advisors and buyers, as they've gotten more experienced looking at non-traditional strategies and products, have put pressure. And part of it is just the innovation or the copycat aspect of Wall Street. When somebody starts raising a lot of assets, the one that comes to mind is Blackstone's BREIT, when they decided to really go all in with their push into retail and created BREIT. One of the many things that they did beyond just being a very large, successful, historically respected franchise is they brought the fees for non-traded REITs down substantially. And that put tons of pressure on everybody that had a product and or was thinking about bringing a product to either match it or be competitive. Because there are a lot of folks out there that do, make the investment on fees as one of the real important criteria, when in the end, if you're paying an extra 15, 20 basis points, but you get really great performance, I think a lot of people would say it's worth it. But yeah, 95 basis points today in an ETF definitely puts them on the high end, but it is an emerging new space, asset class, et cetera. So maybe they would make the argument there's a lot more costs in running the product. You have to think those are going to come down over time, particularly if they gather assets.
Right. And you can contrast this with if you say you wanted to buy the HBAR ETF once it launches. Well, you could go to Coinbase, you could go to Kraken, you could buy those. But as a retail trader, you're likely paying over 1% in those exchanges for the right to buy them. Right. So yes, and it's not, it's a one-time thing versus ongoing with these ETFs, but it's I don't know. It's long-term interesting to see where these fees go. I would assume they approach zero. But I think we're a good ways away from that for most of these.
Yeah, I think there's some runway for the manufacturers, right? The whole industry is short of, I think education. When I say the whole industry, I mean the buyer, right? The advisor end investor is short around education. Most advisors still are pretty gun shy when you think about, are they recommending crypto? If they are, it's generally been around the Bitcoin ETFs. I think that's going to evolve over the coming years for a variety of different reasons, but I think fees will come down more slowly. The margins are always protected as long as they possibly can be.
100%. Yeah, that is true. So moving on, our next topic is one that I got excited about, but it seemed like no one else was paying attention to. So BNY, obviously the oldest bank in the country, the biggest custodian in the country by far, announced that they're exploring tokenized deposits with blockchain payments. Okay. I've done enough research over the years to know that this is not the first time they've been thinking about this. They've been thinking about practicing on this for years. This is the first time they're talking publicly about it. And, it's not like they're going to be like tomorrow decide this is not a thing. This is happening. And this is like, when the biggest custodian, again, when the oldest bank decides to do it, everyone else is going to follow suit. And this is one of the, I guess, if I had made a list in the past of things in the future I wanted to see to kind of validate crypto was happening, this would have been on the list. This would have been high on the list, and we are now there. So this was a big deal.
We'll play this out for the listener, advisor, everyday individual who, let's say they have deposits at a traditional brokerage firm or money center bank, one of the big major too big to fail banks. When we read this headline about the bank or the financial institution tokenizing deposits, so they're looking at short-term deposits, the equivalent of somebody's checking account,
right.
And they're going to do, when they say they're going to tokenize them, talk to the audience about what that looks like from a technology perspective.
I think it can mean maybe a handful of different things, but the two big ones I believe are, in some ways, if you have a brokerage account, if you have deposits there, so if you have cash, effectively, it would turn into functioning a stable coin, and then you could move that in or out of there 24/7, 365. You start to, BNY's old school bank starts to act like a crypto exchange in some sense, right? And BNY is very much leading the charge in a lot of things. They are the custodian for Ripple's stablecoin, so they house all that cash and cash treasuries and stuff like that. But so that's one, and the other one is just like, over time, the other things they custodian, so whether it's stocks and different things, those will become tokenized too, and those will be able to go 24/7, 365 in and out, so you can transfer. So we almost live in a world where you don't think about the time anymore. Right now, you might think about, oh my gosh, is it 4 o'clock? Can I get a wire done? Right? Wires will bleed past that right now, but only in the last couple of years that's really been a thing. At least on weekdays. If it bleeds into weekend, you might as well you wait till Monday. But it's a world that doesn't sleep, good or bad. And I think initially maybe scary for some people, and the news cycles will change and different things. But I think generally this is a huge step forward in making money more portable.
The skeptic in me would say the person who's 70, 80 years old, has money at BNY, gets a notice in the mail, they still get snail mail. They don't have, they don't use internet, they don't use email much, and they get an email saying, Mr. and Mrs. Jones, we've tokenized your $4 million in your account. Like, I think that person has a different reaction than the person who has been doing crypto on Coinbase. And so, but most of the assets are with the 70, 80-year-old Mr. and Mrs. Jones. So how do you envision these firms rolling out this technological change?
I mean, they can roll it out. It doesn't mean that Mr. and Mrs. Jones need to do anything about it or do anything with it, right? They can continue to write checks, assuming somebody likes to take checks, or they can use their debit card or whatever it may be. I think that banks are smart enough to realize they can't force technology down people's throats to the point where like it would make them want to move their deposits elsewhere. They may try it heavy with marketing, but at the end of the day, people don't have to do it. And again, tokenized deposits are a very fundamental building block. That doesn't really mean that, again, Mr. and Mr. Jones are going to use it, but it allows other people to do other things on top of that. And I think that's the exciting part that, again, Mr. and Mr. Jones won't care about. They won't understand it. But at the end of the day, it's it's kind of like that first building block, much like stablecoin legislation was for from a regulation standpoint.
Yeah, and it's only when we have a financial crisis or a run on the bank, or we have a bank failure, where we realize how interconnected all of the financial institutions and, in many cases, markets are.
Right.
And so it could be more of a technological advancement than it is a practical advancement for most consumers and most depositors.
Yeah, and I forget this exact number offhand, but you just mentioned the financial crisis. It made me think There was a study done by people that deeply understood the financial crisis after the fact, and people that understood blockchain. They kind of had this like panel, and they talked about, had the blockchain been in place and been used in a widespread, I guess, perspective during that time, there's a very good chance that Lehman would have gone under, but we would not have had a financial crisis, because we would have known all the liabilities and who was touched. There was so much assumptions going on, and so much, I guess, over assumptions, that it kind of turned into this, the GFC that it was, and it didn't necessarily need to be that much. So maybe in the future we can kind of prevent something like that from happening, because we have more visibility, and blockchain will allow that. Or you can say, if we ever get to that point in blockchain, we're really screwed. Like, it got really bad. So,
well, there's no doubt about it that these bigger institutions, BNY and the next headline is Vanguard Zion Crypto. So these are big, household names. They're the stalwarts of the financial services industry, from the standpoint of custody, banking, asset management, insurance, all of the above. And clearly they all are very much, and like you said, the opening with this last headline, like they've been deep in doing tokenization at their firms. I think now, and we continue to talk about this still, the regulation and the clarity from, the government and the legislators around being able to bring this out to customers and or their operating and technological infrastructure.
Correct. Yeah. And it's it's just, there's weeks where it feels like, oh my gosh, we moved 2 years into the future, and other times it slows down. But right now there's a lot of these weeks that are 2 years into the future, it seems.
Yeah.
Or we've been waiting so long, it seems like we finally got what we're asking for, or the start of it, that it feels like a big win. And I guess at some level it is. So,
well, Vanguard is obviously a household name, like I said, when it comes to retirement. So for advisors and people, listening, that that is not a name that most of them wouldn't be familiar with. But I remember a year ago when we talked about Vanguard, they had come out, the leadership had said, we're not doing anything in crypto at this point. That looks like it might be changing.
Yes. And with an asterisk, I suppose. So it sounds like they're allowing crypto ETFs on their brokerage platform, probably not in retirement accounts. I think it's the line you're going to see first from them. And then I would imagine they start to see the ability to make money off this, and then everyone gets it, because they are, again, a business looking to make money. But it's I figured Vanguard was going to be the last one of all the major ones, and they're going to be pulled into this kicking and screaming. But maybe they're not going to be the last one. They're going to be close to the last one. So we'll see.
Yeah. Yeah, it makes sense that they would start with the brokerage accounts, because there's just a lot less risk there. I think as advisors, whether they're brokers or their fiduciary advisors, that line is blurred a lot. But I think that's where a lot of firms, from a compliance perspective, I think still have a lot of work to do around getting comfortable, and therefore giving the green light to their advisors to go and recommend strategies. And I think that's one of the reasons why BlackRock and some of the other bigger firms have reported on the hundreds and hundreds of billions of dollars held away from these brokerage and advisory firms, because they won't support crypto yet. So I think a lot of that, like you said, is going to come down to business decisions once there's regulation, and those firms are going to bring those assets back under the umbrella, so they can bill on them and advise on them. So yeah, I wouldn't be surprised if it starts a brokerage and then eventually makes its way to retirement.
Yeah, and I think you made this point a couple episodes ago. Even if, say, Vanguard flipped the switch tomorrow, it's all the trustees and everything of 401k plans are going to have to basically be willing to turn it on too. So it's not like we're multiple steps away from it showing up in somebody's as a Vanguard option in somebody's retirement account at this point.
Yeah.
So,
yeah.
So I guess a thread that kind of ties that last one to this one again is regulation. So real estate tokenization is something that I've long thought made total sense. And I've used it as an example when I'm talking to people about crypto, about how it can change things. And Robinhood's CEO was on Bloomberg recently and said, the quote is, "Real estate tokenization is a freight train. We figured out how to do it. We're waiting on regulations." I didn't expect it to come from him. I'll say that up front. But I guess with it, as a tech company, you can be in any business you want to be if you're passionate about it. So it's it'd be interesting to see how quickly this comes to be after regulation, assuming we get it this fall. There was some progress made, and then obviously the government shutdown has not helped that. But it's it could be an exciting fall just due to like regulation and then allowing tokenization stuff that's non-monetary, just to kind of allow the system to grow a little bit. So
Yeah, I was having coffee earlier this week with a self-directed IRA custodian, and one of the things that person told me that they went to their manager, and very seasoned executive, been in the financial services industry 25, 30 years, and said, what is our company doing around tokenization? And they do self-custody for individuals who have an IRA. Maybe it's been held at one of the major custodians like a Schwab or Fidelity. Well, they want to go invest in crypto and or oil and gas or real estate, and they can't do that at some of these custodians because those assets are not on an approved list, or they're not approved for various reasons. So they have to go open up, if they want to use qualified money, meaning retirement money, they have to go open up a self-directed account, giving them a lot more flexibility around where they put that money. And he said, when he asked the question of management, and I'll keep them nameless, what are we doing in tokenization? He said he got a blank stare. And for somebody that's in custody, to your point, and competing with BNY and competing with, these major top 10 custodians, the idea that these firms are not yet, or are, unfamiliar with why tokenization matters, I think are going to get left behind. And that was his implication, was we need to have a business strategy, because all of our customers are going to want to know that their securities or limited partnership interests or what have you, when it comes to these illiquid assets, can be and are tokenized.
Right. Absolutely.
Yeah.
Yeah. It's, and people obviously they're in positions of decision making at some of these bigger institutions, but they also have personal beliefs that could be clouding or not clouding the judgments for a much bigger group of people, which is just, it's got to play out as human nature, but makes it more challenging. So
yeah, a lot to come around tokenization. It's been something that's popped up a lot more frequently, I feel like, this year in 25, and I think a lot of that is obviously due to the conversations and some of the progress that's been made around regulation, but more to go.
Absolutely. So I guess a tangent to regulation. So the SEC issued a no action letter. This is our next topic on crypto custody, specifically saying the letter stating that investment advisors can use state chartered trust companies as qualified custodians for crypto assets. It used to have to be at a national level. This is a big deal because it gives more flexibility for things to develop. And some states, Wyoming, New York, other places have got some decent rules in place to be, I guess, utilized in this case. So cool to see the SEC trying to get out of the way a little bit.
Yeah, and this very same coffee meeting, one of the topics that came up that I thought was pretty unique was this custodian is launching its own trust company. And they are very pro crypto and digital asset from the standpoint of some of the custodians in their space have been more reluctant to embrace custody of crypto and other digital assets. This particular firm is not only receptive to it, but they're also going forward with creating a trust company. And so for me as an advisor, when I think about individuals who have their assets, in a retirement account, they've retired from a company and they're looking for ways to diversify beyond just the, handful of mutual funds or handful of, target date retirement funds that are available to them, because those are the big names that have been approved by their record keepers and by their 401k administrators. Like when they want more agency and they learn about what are their options with respect to self-directed custody, or they're an entrepreneur business owner and they open a solo 401k, like I'm trying to educate them around how do you use the options at your disposal around self-directed and 401k self-custody. And to me, this headline, like allowing these custodians to embrace other asset classes like crypto, I think is a sign of progress.
Yeah. I agree. So move on to our last topic here. We don't have tons to talk about here, but So Swift, the organization that runs the wire system around the world,
Mhm.
that a lot of crypto likes to make fun of, and is effectively trying to replace in many cases, announced that they're doing a blockchain initiative. What I found kind of just ironic about this is for years they said that blockchain wasn't going to do anything, and then they kind of added it as an option to do funding, but kind of not as a great way. But in this case, they said they're doing it with consensus, which is part of Ethereum, or kind of I guess is the business around Ethereum. There's probably about 4 or 5 other blockchains you could have picked that would be better than Ethereum if you're going to deal with payments, especially the volume that they do it. So I don't know what this is. I did see that Brad Garlinghouse from Ripple said that this felt more like a marketing stunt than actual initiative. So obviously he has a vested interest in believing so, but it's interesting to kind of see it happen. And they announced it the week that they're doing their own I guess developer conference of sorts. So I don't know. I want to see Swift kind of figure out how to evolve because I think it's important for the world. It doesn't need to just all of a sudden go away one day because I think that would be a very rough day unless it was gradual over time. But we can as well to stay on the sidelines and watch this one play out. So.
Well, what grabbed my attention about this one was just the number of institutions worldwide who rely on the system for sending, payment, and institutions and individuals who rely on the system to receive payment. So you just assume you wake up every day, at least in the United States, and think, oh, okay, I'm going to send a wire or I'm going to receive a wire. Like everything is working in the background when we know that the technology and the infrastructure behind it, every year wires are lost and
Mhm.
funds are delayed, and so it's long overdue, right? I don't want to overstep the comment, but I think it's generally viewed by people in technology within blockchain that it's overdue for an upgrade.
Yes.
And there's a lot of opportunity, to say the least, in terms of improving funds that are unaccounted for, lost, sent in mistake, etc. So I think, yeah, I think it's the number of institutions and the size of institutions and the number of people that it impacts, to me, that this one's going to come up again. It'll be interesting to see how far they go, and if
Mhm.
it is a marketing stunt or they're real serious about,
Right.
this partnership with Consensus or somebody else.
Exactly. Awesome. Well, I think that's a wrap. So thanks for joining us on this episode of the Weekly Crypto Check-In. To stay updated on future episodes, you can find us in any podcast player by searching Teton Crypto Capital or the Weekly Crypto Check-In. Take care.
The information presented in this podcast is for educational, informational, and entertainment purposes only and does not constitute financial, investment, trading, or any other advice. The content provided is general in nature and not tailored to any individual's specific circumstances. Always conduct your own due diligence and consult with a professional financial advisor before making any investment decisions. Cryptocurrency trading involves significant risks, including, but not limited to, the potential for loss of all or a portion of your investment, market volatility, and regulatory uncertainty. The hosts, guests, and producers of this podcast are not responsible for any decisions or actions taken based on the information discussed herein. Cryptocurrency is not legal tender in many jurisdictions and is subject to market risks. Past performance does not guarantee future results. This podcast does not endorse or guarantee any investment outcomes or results. Use of this podcast implies your acceptance of this disclaimer.